Spending money is a way easier than trying to save money, and that's why it's no surprise that budgeting and saving money don't come naturally to most people. Most individuals have to intentionally inculcate the habit into their lives in order for it to become a lifestyle. While it may seem hard, the truth is that creating a realistic budget is not as difficult as it may seem. To begin, it is advisable that you take time to create a budget, which can help with reorganizing your finances, prioritizing spending, and managing your debt. All of this will provide room for a long-term financial plan. Welcome to this channel. Today, we'll be discussing the ultimate guide to budgeting. Before we continue, please like and subscribe to the channel to stay up to date with our latest videos. Now come along as we examine some strategies to balance your budget and save money. The first strategy that we are going to talk about today is creating a classic budget. This is like the oldest tool in the book because, as we all know, budgeting your money is the backbone of having a sound financial plan. And when all the figures are listed out plainly in black and white, it makes it easier to get a better perspective on where your money is going and how you can put it to good use. A sound budget can allow you to spot some areas where you're spending more money than you realize, as well as set you up for occasional indulgences and unforeseen emergencies. There are a lot of reasons why you should take the time to create a classic budget, and I'm going to let you in on some steps that you can take in trying to create one. Firstly, you should gather all your electronic or paper bills, receipts, pay stubs, bank statements, and any other record of income and expenses for at least a month and put them in one place. This will make it easier to keep track of your monthly expenditures. You should also take the time to design a budget worksheet. You can do this by using a template from a Google worksheet, an Excel spreadsheet, or just a normal sheet of paper and pen. You could list all of your income after taxes, which could include your freelance and employee income, investment income, and interest earned on any savings accounts. You could then list out all your expenses, for example, rent or mortgage payment, credit card payment, installment loan payment, grocery receipt, or utility bill. Add up each of the figures separately and subtract the expense from the total income. This will give a clear overview of your financial health. After all of that, you can easily tell if your income is greater than your expenses, which would mean you have money to save, or if your expenses are greater than your income, which would mean you have to cut back on some expenses in order to balance out your budget. The last step is to drill down on all of your expenses and further categorize them into fixed, variable, and discretionary expenses. Don't worry, we're going to spell out what all that means. Your fixed expenses are expenses that remain the same from month to month, like your rent, while your variable expenses represent expenses that can be lowered by behavioral changes, such as electricity bills that can be reduced by turning off lights as you leave a room. Discretionary expenses, on the other hand, consist of wants rather than needs and provide the most opportunities for savings. Now that we are done talking about the classic budget approach, another strategy you can try is to adopt the 50 to 30-20 approach. For those who aren't familiar with this technique, the 50 to 30-20 rule of thumb is a way to allocate your budget according to three categories, which include needs, wants, and financial goals. Under this approach, you decide to spend 50% of your after-tax income on food, housing, and other necessities, 20% on paying down debts or increasing savings, and 30% on what you want. This may seem simple, but it comes with a lot of criticism, as some people believe that it leaves a lot of room for discretionary spending and less for increasing savings and paying down debt. Another strategy that can be implemented will be the use of apps. While the strategies that have been discussed previously might seem a little bit old school, this method is more modernized. Just like most other things, once there is an introduction of modern technology, the first thing that comes to your mind is ease. A budget app is no different, as you can simply download your app of choice and link it to your credit card and checking account. The app then tracks your monthly spending and generates a monthly spending report by category. Budgets also come in handy for other things, such as alerting you when a payment is due and when your account balance is getting low, as well as when there are suspicious activities going on in your account. Though some budget apps may be free, others might require a monthly fee, of between $0 and $7. Once you have been able to figure out the whole budgeting process, the next item on the agenda should be how to save more money. The first approach to saving money would be to put your budget to work. Once you've figured out how much money you're spending and where your losses are coming from, you have to take the necessary steps to put your financial future front and center. Another strategy for saving, which should be one of the most obvious, is to reduce spending. This can be done by first cutting spending on items that you don't need. As humans, it is easy for us to confuse the things we want with the things we need. You can ask yourself if you really need that latest phone, if you really need that car you drive, or if you can do with a smaller one to cut down on costs. Do you need to spend that much on a vacation? These choices are variable and dependent on the individual. You could be a car salesman and actually need that much to show off your product, and laying out all your expenditures can help you determine what you can and can't do, which would help you prioritize and reduce your expenses. The next strategy we are going to talk about is getting a handle on your debts. Something that almost all adult humans have is the accumulation of debt. Debt acquisition has nothing to do with your income, as even the richest people have quite an amount of debt that they acquired at some point. Some common and almost unavoidable forms of debt include car loans, student loans, and mortgages. Although credit cards and some other kinds of debt can be an important part of your financial toolbox, as they help build credit histories, you are advised to take caution when using them. One thing that is very important when it comes to debt is to understand that there is such a thing as good and bad debt, and also know the difference between the two. While making use of your credit and maintaining a good credit score are essential, it is also essential to reduce your debt expenses while paying them off. Take, for example, transferring your credit card balance to a card with 0% APR or refinancing your student loans, which could reduce the amount you pay in interest charges and boost your debt payoff plan. The road to accumulation of wealth is a long one, but to get anywhere in life, you must start from somewhere, and developing a good savings habit is as good a place as any to start. Saving money is something that is easier said than done, but we continue to look for ways to do it, and one way to save is by reducing your tax burden. It is well known that nobody likes to pay taxes. Sometimes it feels like paying the government for doing nothing. Nevertheless, taxes are an important part of your financial plan. No matter your income, it might be shocking to realize the level to which the right tax strategies can affect your finances. Learning how to minimize the effect of your taxes on your finances can help you regulate your expenditures. Some forms of tax planning include claiming all the deductions and tax credits you're eligible for. Setting up automatic savings is another strategy that can be utilized toward improving your saving habit, and it is one of the easiest steps you can take toward wealth accumulation. How can this be done? First, sign up for automatic savings and then link your checking account so a fixed and affordable amount can be transferred to your savings account every month. Hopefully, with these strategies discussed today, we have been able to show you some of the best ways to budget and save, as well as balance your finances, so as to start your journey toward wealth accumulation. Thanks for watching. Be sure to let us know what you think in the comments, and please do not forget to like, share, and subscribe. See you in the next video.